the options that those founders had were really in two camps. It was either piece together $1 million angel round, with 25 and 50K checks, meeting with folks in between, them seeing their customers or their patients, as it were, or hop on a plane and look for funding elsewhere. And both of those scenarios we found to be completely suboptimal for this region.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them.
Welcome to Upside.
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. First Words This Morning himself, Eric Hornan.
Oh, those were pretty ugly words, weren't they?
We are getting the hang of it. We're getting back on the horse.
I woke up this morning. I realized I didn't say a single word. I hopped on the mics. Jay said, "Hey, how are you?" And I said, That's what it sounds like.
It sounded less like the Tasmanian devil and sounded more like it just failed. It sounded like the process failed to boot and words did not get produced. You're like, hello.
Well, you know what? I got my coffee. I had a couple sips and we swang right into sentence number 2. And here we are, Jay. We are on the mics. We're saying hello.
We are on the mics. We're saying hello. Man, I feel like a dummy. I don't have my coffee. And we've got a coffee chat here today. A fun one going into Atlanta, Eric. We haven't spent a whole lot of time in Atlanta. What's going on in Atlanta? Before we get in this interview, what do you expect is happening in Atlanta?
Boom times. I have heard nothing but great stuff happening in Atlanta. It feels like there is a lot of momentum there. It also feels like kind of like Chicago. It's that go-to destination in the region. So in the Midwest, Chicago is like the go-to destination. In the Southeast, Atlanta is the go-to destination. So I think that those kind of regional go-to destinations are having quite the time right now as cities.
Speaking of Atlanta and go-to destinations, our friend from Atlanta, Charlton, is in Columbus right now, and I have failed to set up a meeting, a rendezvous. I will have to do that this afternoon. Shout out to Charlton. Sorry that I've dropped the ball here.
Charlton is of the Keystone podcast, and you can check that out by searching Keystone in your podcast player.
And he's doing a little bit of a tour of the country, living his life the best way that he can, Eric.
That's right, Jay. Charlton only has one life, and he wants to live it the best way he can so he can talk to our friends at Ethos Wealth Management. If you, dear listener, want to learn more about Ethos, you can go to upside.fm/ethos, ETHOS.
Well, our guests today are Michael Cohn and Sean O'Brien. Michael and Sean are successful founders, operators, and community builders building a firm called Overline. Overline is an Atlanta-based, founder-operator-led venture capital firm focused on investing in seed-stage businesses primarily in Atlanta and the Southeast region. They partner with founders throughout their seed stage and lead investments ranging from $250,000 to $1.5 million. A lead, Eric, a seed stage lead.
The thing that we've been asking for to talk to the most. I love that this came across. There's just something different about when a venture fund is a lead, especially at the seed stage, as opposed to a lot of the companies we talk to are follow-on capital. A lot of the venture firms we talk to, a lot of the angel investors are follow-on capital, or they're Series A, leads or whatever. But you don't see a lot of seed stage institutional leads out there, Jay, outside of the Valley.
They must be popular guys. They must have a lot of founders coming to them. I'm excited to learn more about the Atlanta region and the Southeast at large, as well as the background of both Michael and Sean. Eric, we had for a while kind of a policy to not have 2 guests on the show at a time because we thought that it would be challenging to navigate the conversation. But every time we do have 2 guests, I tend to really enjoy it.
Maybe that's a cause and effect thing, though, because we push back on the 2 guests. And if people push back and are like, no, our story's better with 2 people, then maybe it's an opt-in thing. Maybe our screener is working, just not the way we intended.
Love that. Love giving ourselves credit for something that we did not intend. Well, we would love to hear what you guys think about this episode with Sean and Michael. You can tweet at us at UpsideFM or email us hello@upside.fm. And we'll get to that interview with Sean and Michael right after this. Eric, we got to make some big changes to how we do operations here at Upside.
This feels like an intervention, Jay.
It's a bit of an intervention. I have to give you some tough love. We've had some calendar problems over the last couple weeks.
I've had some calendar problems. You don't have to throw the third person on this.
I do like to take the blame for you, but this one is on you. And Eric, I think we have found a solution to our calendar and scheduling problems.
But there are 101 scheduling tools out there, Jay, that can help you avoid the awkward dance of finding a time to meet.
But this tool is by far and away the best one I've seen, and I have looked at a lot of scheduling tools. And I am talking about SavvyCal.
SavvyCal makes it a collaborative effort, allowing you to personalize links and allow recipients to overlay their own calendar on top of yours.
It's going to make booking guests for Upside and even just one-on-one conversations a complete breeze. You got to see what this looks like. You got to see how it works, because you're going to ask, why wasn't it always this easy?
You can sign up for a free account at savvycal.com/upside. That's SavvyCal.com/upside. And when you are ready to test out a paid plan, use the code UPSIDE to get your first month free.
Michael, Sean, grateful to have you here to talk about Overline. But before we get into Overline, I'd love to hear a little bit about your backgrounds, your backstories, and what brought you together to start Overline. So, Michael, I'll start with you. How did you guys get here?
Thanks, Jay and Eric, for having us here today. We're excited to be here. I'm Michael. I'm a founder. I started my first company right out of college. That was a failure. Started another one a few years later in 2008 here in Atlanta called Cloud Sherpas. And thankfully, that was a success. We grew the business out of my basement to nearly 1,200 employees. We were the top partner in the Google, Salesforce, and ServiceNow ecosystems, almost 200 million in revenue, and Accenture bought the business in 2015. At that point, I was looking for my next career, and along my Sherpa journey, had an opportunity to write a few angel checks, one of which was into a company that we spun out of our existing business. And that's really where I got the bug for what happens on the other side of the table. And so when the opportunity to lead Techstars Atlanta came about, when the program was getting established in our city, I jumped at that opportunity. I know you all are familiar with Techstars or recently heard the interview with John Hine and some others. It's a phenomenal organization that really gives you, an opportunity to develop as an emerging manager. And so over the 3 years, I had two primary roles. One was to find great companies, and the second was to build a world-class mentor community to support the companies that were coming through the program. And that's how I met my friend and my partner, Sean.
Hey, thanks, Michael. Jay, Eric, thanks for having us today. We're really excited to be here. As Michael mentioned, we met initially during the Techstars program. We have very different backgrounds. I started my career back in the early 90s with an investment bank out of Nashville, Tennessee called Equitable Securities. Sort of by happenstance, ended up in that career and candidly would have never left. Spent 9 years with that firm, ultimately flipped onto the buy side, went to join a friend of mine, Howard Linson, who at the time was managing a hedge fund out of Scottsdale. Moved out there and co-managed his fund with him for a year, then ended up launching my own fund, which I ran for 3 years. And then we had a series of life changes that brought us to Atlanta. I took a corporate job thinking it was going to be a 1-year reset, took a job with a company that I was a very large shareholder of in my fund. And what was going to be a 1-year reset turned into a 15-year career. Went to work with a small public technology company, had a lot of different roles over that 15-year period. My most prominent role there was running strategy and M&A, where we did a number of acquisitions that helped take us from a very small North America-only company into a very large global leader in 25 countries. Then ultimately, I helped lead the sale of that business to a private equity firm in 2015 in a $1.1 billion exit. And then during my transition there with the PE fund, I had a 3-year transition period where I really leaned into the Atlanta tech ecosystem, started advising individual companies and supporting programs like Techstars, which is where I met my friend and partner, Michael.
You guys have such large experiences, international, selling to Accenture, the world's largest consultancy. Why the focus of Overline so locally in seed stage? I feel like you could have gone upstream. You could have gone wherever you wanted to.
So ever since the beginning of time, it feels like there's been this trope in this part of the country that there's a lack of institutional seed capital, or actually it's been a lack of funding has really been the story. And as we peeled the onion back, we found it to be specifically focused around institutional seed stage funding. And that was never more apparent than when we put 10 companies on a demo day stage every year. Not all 10 were truly fundable, if we're being honest with each other, but every year, 2 to 5 of them were. And the options that those founders had were really in two camps. It was either piece together $1 million angel round, with 25 and 50K checks, meeting with folks in between, them seeing their customers or their patients, as it were, or hop on a plane and look for funding elsewhere. And both of those scenarios we found to be completely suboptimal for this region. And so we set out to establish Overline, to fill that gap, number one, but also to provide great outsized returns to our partners. And we believe that the earliest stages of company development are where we can generate those returns.
It's also an area, Michael, to just build on your point, where we think our skills and experience can have the most impact on a business and on a founder's trajectory. We are very much hands-on investors leaning into our founder-operator histories. We like to actively engage with our founding teams to support them in all their strategic and operational priorities. We want to be in the business with them. The role of a founder is a long, lonely journey, as my partner can clearly empathize with deeply based on his experience with Cloud Sherpas. And having a strong funding partner who's there, who's the first call to celebrate the good news with you, but also to be there to, hear the bad news and help you work through it, or to be a couch session during those challenging times when you need somebody to give you some emotional support and encouragement. We think that that's where we're perfectly positioned, and that each of our careers, while we've had different paths that have brought us here, we feel like everything that we've done up to this point perfectly prepares us for this moment in time to support founders in their earliest stages.
Michael, on the Techstars front, is the Atlanta Techstars Accelerator verticalized in any way? I know some Techstars accelerators are very theme specific.
So there are now 2 Techstars accelerators in Atlanta. There's the Techstars Atlanta, city program, as it were, and then there's the Techstars Atlanta Impact program. So speaking to the first one, that was the program that I ran from 2016 to 2018. That was very much horizontal by design. It was funded by Cox Enterprises, who of course is a very large family-owned multi-billion dollar business in automotive and media and communications. Oftentimes we would hear the CEO of that company, who's also the great grandson of the original founder, repeat, if it's good for Atlanta, it's good for Cox. And so their approach to funding the program and really funding programs throughout our city has not been with their business in mind, but more with ecosystem development at the forefront, which really resonated with me. Atlanta is my adopted hometown. I'm a New Yorker originally. I came here in 2002. Supposed to be 6 months, fell in love with the city and have had success in the city and I'm eager to give back, much in the same way that we've heard the CEO of Cox talk about giving back to the community.
Well, while you guys, started your journeys in Atlanta for different reasons, can you talk about the growth you saw in Atlanta as it relates to the startup and tech ecosystem?
Yeah, for sure. I'd love to. Well, it's, Atlanta's been sort of this 10-year overnight success. Many of us have been working behind the scenes in various capacities to help develop the ecosystem to support what has always been a strong sense of entrepreneurism and innovation here in the city. We've got friends and partners at startup hubs like Atlanta Tech Village, which is about to celebrate their 10-year anniversary. And a lot of us have been leaning in to support founders for a very long time. But up to this point, it feels like Atlanta now is having a moment. We used to be referred to as a secondary city or a tertiary city. Then we were referred to as an emerging market. And we really believe that, maybe accelerated by some of the trends that have resulted from COVID, that the time for Atlanta and throughout the Southeast is right now. We've got a great business infrastructure, fabulous schools and universities. In fact, within a 45-minute car ride from the center of Atlanta, you have almost 300,000 undergraduate and graduate students who want to stay in the community, who are highly educated, many of them deeply technical, coming out of one of the best technical colleges in the country, Georgia Tech. And up until recently, there just haven't been the jobs to keep them here in the community. And so the ecosystem is there. We, as Michael mentioned earlier, one of the things that was missing up to this point was just a really strong early stage institutional funding partner, which is one of the primary reasons we launched Overline.
When you talk about an institutional funding partner, I noticed on your guys' website, it says you lead rounds from 250K to 1.5 million. One of the things we've noticed talking to venture capitalists, investors, founders outside of the coasts is that there are a lot of funds that will follow on. What was your guys' decision around leading, and what makes a good seed lead?
Well, I'd first say we want to lead. We're super collaborative. And so we play nice with everyone. In fact, we have right now about 50 deal flow sharing partners, funds across the country. We like to lead and set terms. We're deep conviction investors, meaning we spend an awful lot of time working with the founders in advance of putting a term sheet in front of them. That's a very good setup for us to be hands-on investors. We want to deeply understand the founding teams, understand the markets that they're building toward, understand their unique insight in the business that they're building. And we are founder forward. We care deeply about the founders that we're supporting, and we want to present symmetrical terms. And we think that we're best positioned to do that as a lead. But I would say that we've recently co-led an investment, and but we're not the type of fund who will likely come in as a follow-on investor with a small check into a big round that just has a small stub piece. It's just not the type of relationship that we want to have with our founders. And so we want to be there. We want to be there to support them throughout the seed round. Unlike many funds, we're only focused on deploying capital in the seed stage. And so when it comes to the later rounds of financing, beginning with the Series A, we're on the same side of the table as the founder, helping them market the Series A and beyond, and helping them hopefully drive the best outcome possible.
If I understand that correctly, that means you guys don't have any reserves for follow-ons. Is that correct?
That's right. We will invest all through the seed stage, but we won't invest into the Series A and beyond. Instead, we will offer our pro rata to our LPs through SPVs. And when we begin to see enough traction in the portfolio and we're far enough invested through Seed Fund 1, that'll be a cue to us to re-up a second seed fund and also potentially create a third fund to take advantage of those follow-on opportunities.
How do you guys think about sell discipline? Are you planning on selling those original shares on secondary in later rounds, or are you hold for forever?
Eric, it may be an unsatisfying answer, but I think the best answer is it depends. When we're entering an investment, we're underwriting to a minimum of a 10x return profile. And that might look a lot different on a case-by-case basis. Our intention is to hold every deal for a minimum of 7 years. We know that not everyone is going to make it to that timeline, and some are going to extend beyond it. But more and more we're seeing opportunities to lighten positions in secondary offerings, and then clearly with the rate of acceleration and adoption of alternative means of going public through SPACs, that's something that we're paying close attention to. But I think that our intention at this point is to not exit a position early. If we do turn back any of our holdings in advance of a Series C financing, it'll be just on the margin.
Before I let Eric nerd out and go down the rabbit hole of SPVs and SPACs, which are magic words that are emerging here on the show, you mentioned John Fine, Michael, and you and him seem to have a similar journey. And one of the things I really loved about our conversation with him and Chris on the show, having them both here, we could talk a little bit about their partnership story even more deeply. So you guys both, as we touched on, probably had a ton of optionality. You guys met, you got along through the Techstars Accelerator. Talk to me about the actual conversations you had that led to this fund.
Yeah, I think that really starts to how Sean and I met in the first place. I remember getting introduced by a mutual connection at Cox Enterprises. I used to like to take some time to get to know the mentors before inviting them in to meet with our founders. And so Sean and I had a very memorable coffee, I recall, outdoors at Pond City Market, where Sean was telling me about his career and about the time that he was spending currently, with the PE firm that had acquired his business, and how he very much wanted to get back into supporting early stage founders. While he was at PGI, he had spent time acquiring dozens of businesses, and really had an empathy and an affinity for those founders. And so through our conversations, one thing that really struck me was the alignment on vision and values. We seemed to really be aligned on what it was that the community was lacking, that we needed to bring to our startup community. And, a friendship emerged. We didn't jump right into a partnership after our first coffee. It took us, 3 years or so of knowing each other and, seeing how one another works with founders, to really get to the point where we decided to build Overline together.
Sean, I wanted to give you an opportunity to add on to that if you think that Michael's missing a key point or misremembering or anything.
Well, other than the fact that it wasn't over coffee that we first met, it was an Italian spot in Pont City Market where we had a salad. I think the coffee meeting was a touch later, but other than that, I remember it exactly like Michael. The most important thing was it was super fortunate that our timelines collided in a way that we were both coming out of our commitments at the same time toward the end of 2018. Michael was wrapping up a 3-year stint with Techstars. I was wrapping up a 3-year transition with a private equity firm I was working for. And we started really conspiring back then about what Overline would look like and how we would help be part of the solution instead of continuing to complain about this desert of institutional early stage capital. And so one thing I'd just mention is we didn't just jump into a partnership. As Michael said, we spent all of 2019 operating together as two angels, looking at deal flow. We ultimately invested in 3 opportunities independently, but through the lens of ultimately creating a fund. And so we knew each other, we were friends, we had a lot of trust built there, but we want to make sure that our operating styles meshed nicely. And so we spent all of 2019 working together. And toward the end of 2019 is when we said, yeah, let's do this, and started fundraising around Labor Day or so that year.
I think a lot of people start when they say, hey, I want to launch a fund. The first thing they do is go out and angel invest. What has been different in your experience between the angel investing process when you were working together but independently and now investing out of a fund? Like what didn't you expect, or what did you expect but still was significantly different?
I think 2 things come to my mind right away of what's different between being an angel and being a professional fund investor. One is obviously the check sizes. We're not writing $25,000 checks, but as you know, we're writing checks between $250,000 and $1.5 million. And with that comes a tremendous amount of responsibility. It's funny, when we were fundraising, we had a couple of LPs ask us about our own personal commitments to the fund and, how much of our own capital we were putting at risk. And, we polled a number of folks to understand what market was, and we felt like we were right in line with market. We were each contributing 1% of the fund each. And, for some investors that didn't seem like it was enough. They wanted to know that we had more of our own wealth, if you will, in the fund. I'll tell you that for me, having the responsibility of managing other people's money weighs far greater on me than putting my own capital at risk. And that's something I suppose I did expect coming in, but it continues to ring true with every investment that we make.
I'd just jump in there and say, one of the things I love about my partnership with Michael is, we have very, very different backgrounds. And, our Venn diagrams have, just a little bit of overlap. And it's really about the things that matter. It's about, who we are as people, what we stand for, and how we want to support the founders that we ultimately fund. My journey was very different. I was trained up very much a classical, investor. I started investing 25 plus years ago, and kind of start every conversation and kind of look at a business through the lens of the business model and the financial projections and kind of all that. Michael has such a refreshing perspective, having been a founder. And I think that that's one of the refreshing trends that we're seeing in VC in general, which is a lot of the funds that are popping up, especially in the seed stage, are coming from founders themselves who have a high degree of empathy for the founder journey. They look at the world through a different lens, which I think is really refreshing. And I think in our particular case, having that balance has been really strong. So Michael's journey of going through Techstars and making 30 investments there, and what he's done in the angel side taught him all the skills necessary to be a professional investor, but he still has that core basis of coming up. Whereas I, kind of learned from him. And so I think we have a really nice, healthy balance in, indexing towards sort of the emotional and the EQ component that's so critically important in the early stages, and then everything else that a more classical investor might look for.
So this idea of more funds being managed by former operators is a trend that we're seeing on the podcast. And for the actual founder who's receiving investment, the value proposition seems pretty clear to me, because the fund manager can more empathize with me as a founder, having been in my position. What we don't hear is whether or not that value proposition has a positive or negative effect on the LPs when you're fundraising the fund. So when you guys were going about this, were LPs warm or cold on the idea that this was going to have a former operator as one of the general partners?
I think it was mixed. Jay, I think everybody initially resonated with the idea of founder operator is both unique in the region. Not surprisingly, a lot of the funds here in Atlanta and throughout the Southeast are managed by, finance professionals. So our messaging was unique. It was different when we started marketing the fund about a year and a half ago. We did get a lot of questions about, hey, as you build a portfolio, it's pretty easy to see how you can be hands-on with the first 1 or 2 or 3 investments, but how does that scale? And where do you get in your own way? And ultimately, if you're going to build a portfolio of 20 investments, how is it possible that you're going to be able to fulfill those board obligations and really spend this time? And those are legitimate questions. And there's ones that Michael and I continue to talk through. But I think in general, I think people really understand deeply that by sharing our experiences and insight early, we can help founders identify problems, work their way through problems, hopefully avoid some of the problems that are typical in early stage scaling, and hopefully be a bit of a growth hack for them to find the best practices, help through our pattern recognition, having done literally hundreds of investments between the two of us, help to get examples that directly applied to their set of circumstances to help shortcut their growth and hopefully, help them increase their odds of making it through the gauntlet. But I think in general, it clearly has resonated, as evidenced by, if nothing else, the fact that we oversubscribed our first fund. We came in at around $27.4 million against our target of $25 million for the fund, which we think is strong validation of, our approach and our messaging on this point.
I'm going to just add a quick point to that. As we look at the makeup of the LPs in our portfolio, it's pretty unique, I think, for a Fund 1. We were anchored by 2 corporations, bolstered by a large institution. And then the balance of our LPs are largely made up of entrepreneurs and, folks that have built businesses. And so I think for a lot of our LPs, there was a great comfort in knowing that this fund was going to be led by fellow founder operator, at the helm.
If we take that to the after you make a acquisition side of things, you guys mentioned earlier that you're hands-on and you lean in. I'd like to get a little bit more tactical about what exactly hands-on and lean in mean. How often are you speaking with founders? What are you talking to them about? What is an operator? What does a lean in strategy look like?
Eric, it looks a little different with each company. With most of our investments, we're meeting with the founders on a weekly basis. And then we are there to be their first call throughout the week if something comes up that they need some help with. And so I want to be clear that for us, hands-on doesn't mean that we're being prescriptive. We're not trying to come in and say, hey, create all these reports, track all these KPIs, do all this stuff for us. What we're really trying to do is help lean in and professionalize the business early, help them create, a mindset and a framework to optimize their success. And so we're big proponents of a build, measure, learn approach. We're big proponents of creating KPIs that are highly relevant for the founders and their ability to know where their business is and to be at the helm with the right insight and information. And so we spend a lot of time working with them, and I don't want it to sound like it's a nuance that we're in, but we're not. But we really are. We want to support the founders, not dictate. So when we share insight and perspective, it's just that. It's not direction.
So you said $27 million. We're looking at 250 to 1.5 in terms of checks. So that's 25-ish, we'll use round numbers here, investments on average across this portfolio. How do you think about scaling yourself? Because weekly meetings across 27 companies with just the two of you, plus being available for on-hand emergency calls, that sounds like you're signing up for quite the meeting agenda.
Yeah, I think maybe some of that has been enabled by being behind the camera, 24/7 during COVID. I wonder how we're going to begin to feel that as things open up and we're coming back into the community and getting on the road and even onto planes. Our plan is to grow the team. We are right now trying to figure out if we're going to add maybe a couple interns or possibly an associate this summer. But we have plans beyond the two of us, of course. We hope that Overline will emerge as a firm and not just a fund. And so clearly that involves growing the team.
I would say that one thing I'd add to that we haven't spoken about yet is we have an amazing operating partner network that we've built at the same time we've built and launched a fund. And so today we have 2 or 3 dozen individuals with different experiences and backgrounds, either founders themselves or executives with larger growth stage companies that have a history of supporting early stage founders, most of whom are investors in our fund and many who are not. And they are a huge part of our ability to not only scale our work, but also to maintain our generalist lens that we think is so critical to the Overline story. And so these operating partners will help us from identifying opportunities. They'll help us on the front end diligence, especially if it's a deep tech opportunity. They'll come in there. We'll bring in a few operating partners to help assess the uniqueness of the business. And then they're very much there to support us. So many of them will come in and be mentors or advisors to the founders in our portfolio. And some of them ultimately will serve in an equity advisory role on an advisory board that will help the founders create. So it's not just Michael and I, but we do want to increase our team of employees at Overline, but also it's all within the context of this broader operating partner network.
You guys are located in Atlanta, so I assume you're bullish on Atlanta companies. I'd be curious to know more about what other regions or types of companies are you guys excited about right now as a firm?
Yeah, we're enthusiastic about the entire Southeast. Just before COVID, Sean and I were down in Tampa. We were in Charleston just last week as things are starting to open up. We took a road trip up to Nashville to meet with a team. We just recently completed our first investment in Birmingham. These cities that have often been called, as Sean said earlier, secondary or tertiary, these are the markets in the Southeast. And so every one of the cities that others may refer to as emerging are really important to us. And so we spend time with other investing partners in those areas. We spend time collaborating with the various tech hubs and co-working facilities at those in those different cities, to understand what's happening on the ground. And of course, we also have relationships with founders in those cities. And as I'm sure you all know from talking to other founder investors on the podcast, it's the founders, in those startup ecosystems that are often the ones who are closest to the flow.
Michael, when you talked about Techstars demo day and how it was obvious the lack of institutional capital when you put 10 companies on the stage and they wouldn't have a lot of options. And you said, realistically speaking, not all 10 of those were investable businesses to that degree. Something I think about here with the ethos of upside. Obviously, we are enthusiastic about regions of the country all over the place too. When a firm is focused on a geographical area, sometimes I wonder if their investment in proving that area has opportunity might cause them to take a reach on a company that might not be as investable as a firm would typically invest in. Do you guys think about that, or do you have a way of thinking about that?
Thanks, Jay. It's a great question, but I do want to be clear. We are proud to be of this community and built for this community. But at the end of the day, we're capitalists. And we are looking for the very best deals for our partners. That's our job. That's our obligation. The great news is that we think that there's significant meaning and meaningful deal flow here in our community, both in Atlanta directly and throughout the Southeast, including some of the cities that Michael mentioned. And so what we're looking for as a generalist fund, we look at lots of different industries, lots of different business models, but we're really betting on the founder. These are seed stage investments. And so we index very, very heavily toward founders. We look for founders, hopefully founding teams that have authentic connections to the problems that they're working to build, ones that have a different degree of humility. We're not necessarily looking for the ones with a Silicon Valley veneer. We're looking for ones that are authentic, that have transparent relationships with us, that are coachable, that will vibe well with our hands-on approach to investments. And we have seen a very consistent number of them in the year and a half that we've been investing in the region, and we see no signs of that deal flow slowing down, especially as Atlanta seems to be having a moment now. The Southeast seems to be having a moment now. We're celebrating a number of new unicorns in our city. And the more that founders start seeing what great looks like, and the more that this flywheel starts turning, we see no signs that that's going to slow down anytime soon.
Michael, Sean, this has been awesome. If people want to learn more about you or Overline, where should they go after the show?
We have our website at overline.vc. We're both just starting to be a little bit more active on LinkedIn, and so you can look for us both on LinkedIn as well.
Eric, do you know what I love to have for breakfast?
A big old bowl of J-O's. I just imagine you have a box of cereal with your face on it.
I was going to say reviews on Apple Podcasts. They give me more sustenance than anything else in my life. They bring me energy. They get me ready for the day ahead. And Eric, it's been a minute since I had a good bowl of reviews on Apple Podcasts.
Sometimes I read my reviews right before I go to bed, just so I can dream good dreams at night.
If you want to help me start the day right and help my self-esteem while also helping us in the eyes of Apple, please leave a review for Upside on Apple Podcasts. If you have an iPhone, even if you don't use Apple Podcasts, we would love for you to submit a review about why you love Upside. And if you don't have an iPhone, if you're an Android user, that's okay too.
All right, Jay, we just spoke with the Overline team. Where do you want to start?
Well, I will start with my research, Eric, because I did not dig that deeply into Michael and Sean's backgrounds. And holy cow, what humble guys for such incredible success. Michael grew his company Cloud Sherpas to $200 million in revenue, 1,200 employees, was purchased by Accenture in 2015. Wow, that is quite the ride. And if I'm a founder and I'm looking to take some investment from somebody, that alone sounds like I can learn a lot from this guy.
I was impressed with just how they thought about the space generally and how this venture seemed to have something more than just financial gain behind it for them. I thought that was a good indicator of they're doing what they want to be doing, not doing something because it was the next logical step in a career progression.
Yeah, totally. And we kind of alluded to this, but I imagine these guys have a ton of choices. And this did feel pretty mission aligned. I loved the way they went about it also. We haven't heard from a pair of founding partners that they spent a year angel investing together just to kind of get a feel for each other's styles and the way they think. What a brilliant approach.
Indirectly, we saw that with Blue Note and Firebrand Ventures, which merged, and you can check out on the Upside podcast, us talking about and announcing their merger. But they did it as co-investors as opposed to angels, and it wasn't as intentional, I think. It was, hey, we ended up liking working together over time. We've invested a bunch of stuff together. We see the world similarly. Let's come together. This was, hey, we think we want to invest together. Let's go start angel investing, and let's be intentional about it and learn how each other works before we decide, okay, yes, let's commit to 10 years of our lives together.
And that's a big commitment. So yeah, I think it's a smart strategy. I also didn't realize that Michael had spent time running the Techstars Atlanta program. So really great pedigrees between him and Sean. Sean with his experience at an investment bank and then a hedge fund. I think that's a good balance for the two of them as well. I'm still kind of tossing over this question I threw in late, which is, we hear founders say that they like operator or like operator funds, but I'd love to hear more from LPs and the investors into funds themselves, how they feel about that balance in this world. With Sean's experience in finance, it probably doesn't play into it too strongly. But if you had a fund that was entirely, former startup operators, I wonder what the feedback is like in those investment pitches.
One of the other things to think about from like an LP's perspective is something that they kind of threw out offhand. It was, they lead rounds, and I asked, how's your fund structured or something like that? And they said, well, we don't have anything reserved for follow-ons. We just do an SPV with the LPs if they want their pro rata rights. That is something that is so counter to every fund that we've had on here, that we've talked about. How do you decide how much you're having on? How much are you reserving? That it's almost like dogma in the seed and Series A venture space that you make sure you get your follow-on rights, you make sure you have reserves so that you can double down on your winners. Very different structure here with, we're just not going to do that.
How do you feel about that?
I like it. I mean, I don't know the numbers behind it. I'd need to run all the numbers behind it. But to the point of like they're doing what they want to be doing, I think if they can specialize in just being really great seed leads, their LPs, we don't know who they are, but they could be upstream venture capital firms who essentially are using them as a lead gen source, and they just get to do what they want when they want to do it. And if you have, or maybe their LPs are also just big family money or big, some sort of money that's not going to have a problem writing the follow-on checks anyway. And maybe that's a strategic decision by the Overline team. I'm not sure, but I like it because it helps you specialize, helps you focus, and doesn't make you try to be everything to everyone.
And it gives you more firepower for those seed stage deals, right? Like if you're not reserving that follow on, that's another, some number of deals that you can write checks for in that fund. So kind of falls back on the mission aligned part we talked about earlier in the episode, which is these guys seem to be trying to fill this void, and you see that in the way that they're operating.
They probably get a bunch of questions on, if you're not going to lead our next round, who is? We should have asked them that question.
We should indeed. If there are other questions that we should have asked, you can tweet at us and let us know at UpsideFM, or send us an email, hello@upside.fm. We're going to dig a little bit deeper into the Atlanta tech ecosystem here following this conversation. If there's a company or investment firm in Atlanta that you think we should be speaking to, be sure to tweet at us at UpsideFM or email us hello@upside.fm. And we'll talk to you next week. That's all for this week. Thanks for listening. We'd love to hear what you think about this episode, so tweet at us at UpsideFM or email us hello@upside.fm and let us know. You can learn more about us and browse our entire back catalog of episodes at upside.fm. And if you love our show, please leave a review on Apple Podcasts. That goes a long way in helping us bring high-quality guests to the show.
Rocky and Sylvester, underrated.